Coming up tonight on Business Life, Monetary Policy Committee of the Bank of Ghana increases its key lending rate to 28% from the current 27%.
By a majority decision, the committee decided to raise the monetary policy rate by 100 basis points to 28%, and this is meant to re-anchor the disinflation process.
Telling you what this would mean to the financial market, plus have a conversation with an economist. Also in this bulletin, Ghana's total export earnings hit $4.3 billion in the first 2 months of this year, while the country's trade balance position improved significantly. Plus, Parliament to approve a total appropriation of 290 billion cedis for government expenditure this year, following the recent approval of estimates for ministries, departments, and agencies over the past 4 working days. We are live in Parliament. We have details of this and more lined up for you. Please stay on. I truly appreciate your time. I am Pius Kojobaka, and look now at our stories. The Monetary Policy Committee of the Bank of Ghana has increased its key lending rate to 28% from the current 27%. This was after it met to review developments of the economy over the past 2 months. Speaking at his first MPC meeting, Bank of Ghana Governor Dr. Johnson Isiama attributed this action to current economic uncertainties influenced by external developments and concerns of inflation going up.
Over the past year, partly driven by both fiscal and monetary policy missteps, will require a policy reset to re-anchor the disinflation process. Now, to restore price stability going forward will require a tight monetary policy stance, strong liquidity management, and commitment to the 2025 budget, which seeks to reset the fiscal consolidation process. Now, on the monetary policy decision, under the circumstances, the committee, by a majority decision, and I mentioned majority decision, for the first time we are using a majority decision, unlike the unanimous decisions we have used in the last many years since the framework began. And so by a majority decision, the committee decided to raise the monetary policy rate by 100 basis points to 28%. And this is meant to re-anchor the disinflation process.
Now, joining me in studio is my colleague George Yafi, who just returned from the Bank of Ghana. And George, what more other reasons did the governor give?
If you follow what the governor has been speaking earlier today, he's just trying to put in some measures to try and contain inflation. So it looks like the Bank of Ghana is worried about recent development on the treasury bills market and the fact that government is trying to drag the rates down. And therefore, there are fears that because the treasury bill rate is no longer that high to encourage more investors, the investors might be pulling out of that market and rushing to get maybe dollars and all those things. So the governor believes that maybe going this way, hiking the policy rate might give some incentives to these investors and try to check that action. And I know it might lead to your second question because the Bank of Ghana has also introduced some fresh measures, additional measures, in order trying to contain liquidity on the market. So basically, they are worried about external pressures, its impact on inflation, and the fact that it appears that they feel that there might be some liquidity issues on the market, some more money in circulation, considered loosely. And therefore, you're using this monetary action to try and check that or contain that.
And it is for that reason they've introduced that new measures you're talking about.
You're right on that. And let's hear the governor on this, on some of the issues that he's raised, and we'll talk about some analysis here on the touchscreen.
Great.
Now, so in addition to the adjustment in the policy rate, we are implementing some complementary measures which are meant to strengthen liquidity management and enhance monetary policy transmission. And I want to give you three of those. First is we are introducing a longer dated 273-day instrument, which is meant to augment the existing sterilization toolkit. Secondly, we plan to intensify the monitoring of banks' net open positions to ensure compliance. And now all this is meant to ensure stability in the FX markets. Then the last one is to review the current structure of the cash reserve ratio. You know, there's the dynamic ratio, and there are also those high levels that have been maintained. And we want to assess its broader impact on liquidity conditions and financial intermediation in the economy.
So that's the justification given by the governor, and George is still here with me. So, George, what next?
Well, what next, or what does it mean? And again, going back or breaking the issues down, the Bank of Ghana is worried about the tendency of more money getting into the system. There's so much liquidity on the market. What could be the impact on inflation? You look at the policy measure one in terms of the 273-day instrument to augment existing measures, that is called the sterilization, to try and check the amount of money in circulation. Also intensify the monitoring of the bank's net open position to ensure that it's in compliance in terms of reserves issues and all those things. So it looks like they're going to tighten their watch on the market in terms of liquidity issues and inflation, and also review the current structure of the cash reserve ratio to assess its broader impact on liquidity conditions and the financial intermediation. So remember that the Bank of Ghana has increased basically to say that if you take X amount of deposits from the bank or from the public, you're supposed to keep X amount with the Bank of Ghana. And they've increased that amount. So you realize that everything the Bank of Ghana is trying to do is trying to check the amount of money in circulation. And it looks like they are worried that if they are not a little bit tough on the market to try and check the amount of money in circulation, watch inflation. If you look at the IMF program, they should have done somewhere around 17% around this time. So what does it tell you? You're looking at that inflation end of year around 11.9%. You have inflation right now of 23%. It means that we should be expecting, all other things being equal, further hikes to get the monetary policy rate in line with the IMF program, and also ensure that they meet that end of year target of that 11%. But some also argue that maybe it's not just a monetary action. The fiscal also has to complement the efforts of the Bank of Ghana.
All right, so George, talking about liquidity issues, of course, money comes to mind. What has the Bank of Ghana governor had to say in relation to sustaining the strength of the cedi?
I mean, he talked about the fact that what we are seeing right now has to do with they increasing the amount of dollar support on the market as well. And they are going to continue with that measure. He feels that also some fiscal actions of the current administration has contributed to this action. So expect the Bank of Ghana, if you look at their reserve position now, I think almost more than $9 billion, quite strong, and even more than what the fund has projected for them in terms of the IMF when it comes to their reserve position. So they have a strong reserve position to support the Ghana cedi, and therefore expect more action. But again, if you look at the stance of the Bank of Ghana, realize that maybe they might have issues with the fiscal direction in terms of government decision to try and reduce the policy or reduce the treasury bills rate. And therefore, they are trying to come through, quote, the back door and try and check that action.
Great, George. Thank you so much, George. And he just returned from the Bank of Ghana, like I did say earlier. All right, so let's make sense out of this and speak to an economist, Professor Patrick Isuming, joins us via Zoom for a conversation on the back of this. Thanks so much, sir, for joining us on Business Live. Now, does this 100 basis point increase come to you as a surprise at all?
Good evening, Pius. Good evening to viewers. Thanks for having me. So, well, I think it was somewhat surprising. I think but when going into the meeting, if there was any leaning, it would have been towards an increase, because overall, it looked like the economy has performed a little better than initially anticipated, especially last year. And as we saw from the data that was released, the other short-term indicators of the economic performance show that the economy is doing better. At the same time, inflation has remained stubbornly high. But I think there was a sense that a lot of the inflation, which is driven by food inflation, has more to do with the supply side factors. And I think at some point in the release, the governor did admit as much. But what surprised me was to hear that the liquidity injection that he referred to in the Q&A session, he did mention that on more than 3 occasions, that there was a liquidity injection last year. Now, that was quite curious because when you look at the budget that was read, there was zero financing from the BoG.
Absolutely.
In fact, in the last quarter, you do see there's some even negative financing, if you could call it. And then, so I don't know whether it is the lending by the banks that is calling the excess liquidity. I found that rather curious. So if you, without this information, it would have been even more surprising. By hearing that there's more liquidity in the system than perhaps expected, especially saying there was a liquidity injection last year, then it's perhaps not too surprising that they decided to raise the policy rate.
All right. So considering the explanation and justification given, what impact do you think this would have on the market and, of course, the economy largely?
Well, I think it's clear, as George was mentioning, there's a clear attempt to improve the liquidity management within the banking system. It's clear that the pieces of the view that there's too much liquidity in the system. So that is something that they are going to crack down. Now, what that will mean for banks, I think what that will mean for customers, the problem is that as the treasury rates were coming down, there was an anticipation that the Ghana reference rate will start following suit and the lending rate will come down. But it appears that the central bank probably think that that's too early. So perhaps the much expected reduction in the lending rate that businesses expected probably will not happen as soon as they want.
Talk to me about the business community. What should they expect? Or what impact really will this also have on them?
Well, I think, there are many ways to look at it. First, yes, directly you think that the fact that the lending rates are not going down is not something to welcome. But at the same time, if this rate hike helps to stabilize the cedi, the cedi's instability is one of the major headaches for businesses. So in that sense, I think it's a balancing act. So on one hand, yes, it would have wished that lending rates would have come down faster. But, if you ask them, probably they would take that the cedi is more stable. And then also inflation becomes a little bit more stable. The macroeconomic environment improves. And then suddenly, I think they will probably take that over some rate reduction. So it's a balancing act. I think it's like they are receiving on one hand and then they have to take on another hand.
Great. Thank you so much, Professor Patrick Esumeh, for your input at this very moment. I truly appreciate it having you on Business Live. Let's stay along at the central bank because the country's total export earnings continue to hit record levels. Latest data by the Bank of Ghana pulls earnings for the first 2 months of this year at $4.3 billion. More from George Yafe.
Amount Ghana realized from January to February this year represents more than 100% jump over what it realized in the same period for last year. Gold was the highest earner, bringing in some $2.3 billion. The country, on the other hand, spent $2.6 billion to finance its imports from January to February this year. The development resulted in a trade balance of $1.6 billion in the first 2 months of 2025, compared to just $386 million in the same period for last year. If this trend should continue, it could go a long way to improve the country's forex reserves and aid the cedi's stability in the coming months.
This is still Business Live. We have more for you after this break. Welcome back from that break. The chairman of the Economic Affairs Committee of the Association of Ghana Industries, Eric Dafoe, has stated that the country would have to focus on a production-centered economy to enable a total reset of the economy. He stressed that spending on social policies will plunge the country into continuous borrowing, which will derail the country's fiscal gains. He spoke on the Joy Business Economic Dialogue.
Well, I think that we can say that there's hope. I particularly was excited about the strategic innovations that the finance minister brought into realigning some of the expenditure items to create some fiscal space to do other things. But, you know, our economy primarily is a consumption economy. And if we want to reset, then we should be focusing more on production. But if you look at the budget as it was structured, the 120-day promise or social contract didn't focus too much on production. It was trying to create some space for people to feel some benefits, like the removal of all these e-levy and some of the taxes. But coming from an industry perspective, I think that we need to be deliberate in our actions. I mean, there's this debate within the intellectual circles about whether stability should come first before growth or whether growth should come first before stability. I believe in the second option.
As in growth should come first before
growth
stability?
should come before stability. Growth can lead to sustainable stability. But if you take knee-jerk actions to bring about stability, you're likely to bring in money like debt to stabilize the system. And if your production doesn't take up, then you end up in this vicious cycle where you eventually end up as we've ended. So if we spend more money, you know, running a deficit budget is good, but only on condition that the deficit goes into production.
9 government institutions are said to be struggling to achieve economic prosperity. That's according to the Index of Government Institutions' Performance Towards Economic Prosperity 2024 report. These include GRIDCO, Ministry of Defense, Ministry of Employment and Labour Relations, among others. However, the report pointed out that 41 out of 50 institutions surveyed achieved high performance towards economic prosperity. Here's more from the launch of the report. Of government institutions' performance towards economic prosperity measures the contributions of government institutions in advancing economic freedom and enhancing wealth creation. From the report, 41 institutions achieved a score of 50% or above, placing them in the passing category, while 9 institutions scored below 50% mark, placing the failing category. Speaking to Joy Business, co-founder of the Africa Center for Entrepreneurship and Youth Empowerment, Richmond Kwesi Ansa, said the purpose of this classification is to quickly identify how many institutions excelled, met or did not meet the performance criteria toward economic prosperity.
For Ghana to progress, if our economy in general will do well, then these institutions have to do well. So they have to make sure they up their games and make sure they improve on the things that we've identified. There are a number of weaknesses. We've done a lot of research. We've collected a lot of information to come up to these conclusions, and we've made recommendations. And we believe that when these recommendations are put to practice, it will go a long way to help the country in general to progress. Yeah, so we found that the Ministry of Interior did extremely well, way above all the others, and realized that there were 9 institutions that didn't do well. So something around the Ministry of Defense, the Armed Forces, the Ministry of Education, GRIDCO, and then Ghana Airport Campaign Limited didn't do well because they have too many weaknesses that needs to be fixed. Resident Fellow, Fraser Institute of Canada, Fred McMahon, urged government to implement recommendations of the report.
If this report were implemented, the government, as mentioned, would be in a far better position to protect the economic freedom of Ghanaians. Economic freedom is simply the ability of individuals and families to make their own economic decisions. And that has proved far more effective in creating prosperity and in reducing poverty than overly powerful government or the greed of crony capitalists. And to see that, all you have to do is look around the world.
Meanwhile, co-founder of the Africa Center for Entrepreneurship and Youth Empowerment, Dr. Richmond Ansa, expressed hope the report will spark conversation for national discourse.
Countries that have thrived, it has been the battle of ideas. So we want this to be a starting point, as revealed earlier. The Fraser Institute gave us the first step. The Index of Economic Freedom is localizing what Fraser Institute puts out there, because it would be so unfair to just pick what has been done elsewhere and just bring it here and say that, look, we are imposing this. No, we decided to localize it and make sure that everything that we are doing is contextual. We are hoping that it sparks a certain level of conversation, first, on coming up with policies that are backed by data.
Now, Parliament is poised to approve a total appropriation of 290 billion cedis for government expenditure this year, following the recent approval of estimates for ministries, departments and agencies over the past 4 working days. The Ministry of Education emerged as the largest beneficiary, securing a significant approval of 31 billion cedis last night. My colleague, Kweku Asante, joins us in studio right from Parliament, and for a while now you've been in Parliament. Now, yes. Thank you so much for joining me. Now, quickly tell me whether the appropriation for the year has been passed.
That hasn't been done yet. It's going to be a long day for Parliament, given the kind of work that they have to do between now and midnight when they're expected to adjourn. As we speak, proceedings have been put on hold for about an hour for leadership to engage on some important matters. And then they will return to conclude with the estimates for parliamentary service and a few other MDAs. Once that is done, it will feed into the total appropriation, then that will be done. We expect that they will proceed to deal with other matters like the bills, some very important ones like the Gold Board bill, for instance. The expectation is that Parliament will pass that bill this very evening before they go on break. And so all these matters are outstanding. Like I told you earlier on, Parliament is currently on suspension for about an hour for leadership to engage on some matters. When they reconvene, perhaps around 6 o'clock or 6:30, they will continue to conclude on the MDA's budget, and then they will do the appropriation and then pave the way to consider some bills before they go.
Okay, we're also learning that over the period, we saw some ministries, having their budget scrapped or slashed, I should say. What informed that?
So if you look at some of the MDAs who came before Parliament, there are some discrepancy between what is in the budget presented by the finance minister and the estimates the ministries themselves brought. And so sometimes they have to do reconciliation. So it is not totally like slashing, but it's sometimes because there's a difference between what Dr. Kasala-Tufose put in the budget that came before the House and the estimates. Mind you, the ministries themselves bring their estimates. That is different from what may have been put in the budget. And so the committee and Parliament will have to do a reconciliation between the two and find the appropriate amount before it is approved.
Great, Kweku. Thank you so much, Kweku Asante, joining me in studio to tell us what is happening in Parliament in relation to the appropriation bill. You're still watching Business Live, and that's our part company here on the program. Up next is Beyond the Numbers with Winston Taki and my colleague Isaac Kofieji. Do stay on.